As we head further into 2023, we find many reasons to be constructive about emerging markets. China's sudden reopening and an easing of global inflationary pressures are clear positives. Markets such as Chile and Indonesia have already started to pause or scale back the magnitude of their interest rate hikes. We expect a policy pivot to revive consumption and spur economic growth as inflation slows. In addition, after a slowdown in earnings in 2022, for many markets there's a prospect for a recovery in earnings this year, although much of that may be seen in the second half of the year. Nonetheless, a pickup in earnings revisions in emerging markets would signify better times ahead for equity valuations. Lower inflation, however, can also be associated with a weakening global outlook, and the inversion of the US yield curve indicates a possible recession on the horizon. Economies with a greater focus on domestic demand, therefore, are much better placed to weather a more challenging environment. These markets include countries such as India, Brazil, and Indonesia, with India also attracting corporate investors looking to diversify their manufacturing base away from China. Similarly, the Middle East is experiencing an influx of people and capital, whilst enjoying an upturn in consumption due to the positive spillover effects from high energy prices. As the investment environment evolves, an important feature that we seek in emerging markets is resilience in terms of both economies and companies. A particular area of focus for us is the sustainability of corporate earnings, whether in the face of COVID-19, policy changes, technology disruption, or other challenges. We see companies with structural growth drivers aligned with digitalization, decarbonization, and premiumization emerging as long-term winners. It's clearly been a difficult period for the asset class and challenges remain, but we're confident on the quality of the companies that we invest in. These are well-managed businesses with robust balance sheets and operate in secular growth areas whilst trading at attractive valuations. These characteristics should therefore drive the long-term performance of the trust.